If you were given the opportunity to talk to Warren Buffett, would you take it? I know I sure would, and I'd be willing to bet that most people watching this video would love to talk to Warren Buffett about business, finance, and investing. Now, while I was not able to talk to Warren Buffett, I came up with the next best alternative. I asked ChatGPT to be Warren Buffett and asked how the stock market worked. So, here are the top takeaways, and let's get into it. To start things off, we went with our prompt to ChatGPT. So here's what it was. ChatGPT, you are now Warren Buffett. You have Warren Buffett's history, knowledge, and speak just as he does. Do you understand? And then GPT kindly obliged and said, sure, with a couple of disclaimers, but we're gonna move on after that. So next, I just entered, hi Warren Buffett, how does the stock market work? And here's where we landed. We ended up with 6 different mini lessons on the stock market, and we're gonna go through those now. So the first was what a stock represents. So we landed with, firstly, it's important to understand what a stock represents. When you buy a share of a company, you are buying a piece of that business. The price of that share is determined by the perceived value of the company and the expectations of future earnings. In other words, when you buy a stock, you're not just buying a piece of paper or a digital representation, you're buying a piece of a business, and your fortunes will rise and fall with the fortunes of that business. So it's great. Classic Warren Buffett, when you're buying a stock, you're not just buying a paper when it was in the old days or a digital representation today. You're buying a piece of a business. Stocks are pieces of businesses. It's the first lesson. The next was what a stock market is. We ended with, the stock market is a place where buyers and sellers come together to trade these shares. Companies list their stocks on a stock exchange, such as the New York Stock Exchange or the NASDAQ, and this is where the buying and selling takes place. A market is where buyers and sellers come together to transact. A stock market is a market for stocks. Makes sense. So our second lesson, what a stock market is. Next up we had how our price is determined, and I have 3 words for that. Supply and demand, baby. Now, the prices of these stocks fluctuate throughout the day. These fluctuations are driven by a number of factors, including company news, economic indicators, and most importantly, supply and demand for these stocks. When more people want to buy a stock than sell it, price goes up. And when more people want to sell a stock than buy it, price goes down. If you've bought into small companies with low market caps and low volumes, you will experience this firsthand, as I have and I've talked about in the past. Next up, this is a classic Warren Buffett thing of the stock market is not a casino. So, now in terms of investing, it's important to remember a couple of things. First, the stock market is not a casino. It's not about guessing which stocks will go up or down in the short term. As I always say, it's far better to buy a wonderful company at a fair price than a fair company at a wonderful price. In other words, you should focus on the fundamental value of the companies you're investing in. Warren Buffett talks about focusing on fundamentals all the time, as this is how he invests, whereas speculators will just guess which direction stock prices are going to go, and that's a little more casino-like as opposed to long-term investor. Next up, patience in the stock market. Second, be patient. The stock market can be volatile in the short term, but over the long term, it has historically provided a good return on investment. As I've often said, our favorite holding period is forever. This little mini lesson makes me think of Benjamin Graham, who is Warren Buffett's teacher, and he wrote The Intelligent Investor. One of the things that he talked about a lot was how the stock market in the short term is a voting machine, where people are voting with their dollars for the most interesting company, the hottest stock, and prices can go all over the place. And we've seen a lot of this over the past few years. Whereas in the long term, it's a weighing machine where the actual fundamentals of the company, profits and cash flows actually matter. And that's what drives long-term stock prices. So be patient, focus on the fundamentals, and buy some killer companies at some pretty decent prices. Then we had, lastly, don't let fear or greed drive your decisions. As I've said before, be fearful when others are greedy, and be greedy when others are fearful. In other words, don't follow the herd. Make your own informed decisions based on the underlying value of the companies you're investing in. Another way to put this, think for yourself, make your own decisions, and don't just do something because someone else is doing it and it seems like it might be a decent idea. So there's a few little lessons from Warren Buffett GPT. Let me know what you think down in the comments, and make sure to like and subscribe and stick around for more on personal finance and investing in the stock market.